2015 was a rough year for IPOs. So far this year, activity is down about 31% compared to the same time last year. I'm joined now by Kathleen Smith, principal of Renaissance Capital, which manages an ETF that tracks the IPO market. And Kathleen, it's great to see you here. Welcome.
Thank you.
So why has 2015 been such a rough year in terms of IPO activity?
Well, IPO activity relates very closely to returns. And the returns on the IPOs that have been done so far this year have been very poor. In fact, over almost 60% of the IPOs done year to date, the 134 deals, are down or have broken their IPO price. So 60%, that's a very large number, and that means there are a lot of kind of cranky IPO investors out there going to be pretty selective about what they participate in and at what price.
So companies who are looking to go public but haven't quite yet pulled the trigger, I mean, are they afraid to do so? Would it be better to wait until next year?
Well, for companies that can wait, they certainly should. However, there are companies that can't wait. And so this balance of power is going to shift. The IPO investor is going to be in charge of pricing now. It won't be the issuer. But there are issuers that have to come out. And those are ones that are worried about rising interest rates. Leverage companies. So leverage buyouts are trying to refinance now as spreads start to widen. And secondly, the ones that are losing a lot of money, they can't sustain. They've got to build up capital or they won't be able to survive. So those who are losing money with good maybe top line prospects are going to have to come out. The rest should wait.
And talk a little bit more about the Fed's looming rate hike. Of course, markets are on edge over that, but how does that prospect affect the IPO market?
Yes, well, the worries about what's happening with the Fed and relating to a slowing global economic growth, those have weighed on the market overall and then, of course, weigh on new issues. But in terms of the interest rates, for example, the high yield, the spreads are starting to widen between risk-free and high yield rates. And that means that if you have a lot of leverage on your books and any floating rate debt, you better hurry up and refinance that. And then on top of that, if we are seeing slightly slower growth, that is a worry to a leveraged company that may have very thin growth prospects. So they're going to be a lot more anxious to refinance now.
And in terms of what we should expect going forward, are you expecting an uptick in deals during the fourth quarter? Of course, we should get IPOs from Univision, SoulCycle, among others.
Well, we think that right now we're seeing levels that kind of, in September, for example, we've only had 3 IPOs that are priced. That's the lowest level we've seen since 2011. So we think it may be right now challenging to get to anything that look like 14 or 13. We're going to have to go to 2012. And so we think the numbers are going to be down and continue to be down. It takes a little while for the market to recover. And we are seeing obviously everyone's looking at SoulCycle. That's a growth company. They may be able to time their IPO a little bit. They're a profitable company. But the ones we expect to see are very big leverage buyouts. Already on the calendar that is targeted for this week is Surgery Partners and Performance Foods, 2 leverage companies that need to refinance. And then next week, we're going to see a very big IPO from First Data. They're scheduled to come next week. And a few other leverage companies are going to try to come out. Those will be bellwethers. And then we're going to see our first technology IPO next week from Pure Storage. And we haven't seen a technology IPO since July. So that will be a big test for technology and its reception in the IPO market.
When do you think we'll get the SoulCycle IPO?
We think they're going to be able to wait a little bit. I know they're on file. They would have been able to proceed right after Labor Day. They haven't. I think they're probably looking at the market saying, you know, I can wait a little bit for some of the turbulence to die down.
So perhaps later this year?
We think they're targeting for later this year. Square is also expected to come. So there are a lot of really interesting names. What happens is once we go through this change, and returns then have to be built back into the marketplace or it just doesn't work, we will then see the stronger, more attractively valued companies come out of the market. It'll be a good scenario for IPO investors.
All right, Kathleen, we'll leave it there. Kathleen Smith from Renaissance Capital, thanks very much for coming in.
Thank you.
I'm Scott Gamm, and you're watching The Street.